let's talk about stop losses today. Let's go over stop losses and let's actually break down every detail of a stop loss, how it works, where we should have them, how big should my stop losses be? Because I want to ask you something a little bit personal. You don't got to answer. But how many of you guys actually use stop losses? How many of you actually, again, put in a stop loss after you enter your trade and you are willing to get out whenever that stop loss is hit? Even though deep down, we know we're supposed to. I think of a stop loss as wearing a seatbelt. Does anyone not wear a seatbelt in a car? Well, Deck, why don't you use the seatbelt? Oh, I don't know. It goes against my neck. I get too lazy. I always hear the dinging sound, so sometimes I just leave it clicked in and I sit on top of it. Everyone should wear a seatbelt. And you say, no, I don't want to wear a seatbelt. Until, again, God forbid, we don't want this, until someone gets into an accident. Everyone, again, doesn't want to wear a seatbelt until you get into an accident, right? I remember being like a little kid. For some reason, I don't know why, but my dad would always be like, hey, Sean, bring a coat, bring a jacket, bring a hoodie. You're going outside. I would say, Dad, I don't want to bring a hoodie. I don't want to bring a jacket. Just bring a jacket. If you don't want it, you don't need it. And for some reason, I just never wanted to bring one. Did anyone else's parents just tell them to bring a coat and you're like, no, I don't want one? It's like the same exact thing. We say we don't want a coat, we don't want a jacket, until we go outside and we say, man, I really wish I brought that jacket. Man, I really wish I wore my seatbelt. Man, I really wish I set a stop loss. And still sometimes things don't change. We ask and we say to ourselves, man, I wish I wore my seatbelt, but we still don't wear a seatbelt. Or maybe only wear it for the next week, 2 weeks, 3 weeks. And then we start taking it off again. Why is it so hard? Why is it so difficult for us just to, again, put a stop loss? A stop loss is there for you. Because you know what? I'm going to take a guess that 90% of people who are listening to this right now, if you were jumped in on a stock, let's say at the price of $5, we know that if the stock goes down to the price of, let's just say $4.85, we are supposed to get out. So if we, let's say, put this in here, we put this in and the stock, let's say, goes right here. Let's just put it in black. Let's say we get in right here and the stock starts fading and fading and fading and fading. What's the most we can lose? Well, if we have 1,000 shares, the most we can possibly lose is $150. That's the most we can lose. But I know what you guys do. You guys say, Deck, I have a stop loss, but I use a mental stop loss. I use a little mental stop loss, which means when it comes down to 45, I'll get out. But do you honestly get out? How many people have ever said, Deck, I'm going to use a mental stop loss, and you do this? It's at 45. Okay, let's just give it a second. Okay, it's at 480. Okay, when it pops up to 45, I'll get out. Okay, see, it's going to pop up here. Okay, now it's at 470. Okay, just give it a second. Let it pop up a little bit, and then I'll get out. Now it's down towards around 450. You could have had a $180 loss. Now you're down towards a $600 loss. It's like, Deck, stop calling me out right now. Stop again pointing fingers right at me. I'm pointing my finger right at you. You know who I'm talking to. You know who you are. Okay? And the reason why this happens is we can't always trust mental stop losses. Unless you are so emotionally disciplined and so dialed in that you say the moment that this starts coming back on down, I am going to again lock out. Because you know what's one of the most popular emails I get from new traders? This is it. Ready? They say, Deck, every time I jump into a play, I take profits right away. If I am in the green, let's say you buy 1,000 shares. If a stock goes like this, you say, Deck, I'm taking my profits. And you say, yes, I won on this trade. I won $60. I just made $60. But then again, on your other trades, you do this. You hold it, 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 and you lose $500. Who here can raise their hand and say, yep, that's me. Every time I trade, I take profits when I'm up, let's say $60, $50, $40. But every time I lose, I hold it until I'm down $500, $400. Every time I trade, I make a little tiny green. And every single time I every time I win, I make little tiny green. And anytime I lose, I take a massive loss. Well, guys, that becomes lack of confidence. That's all that is. It's a lack of confidence in your trading. It's a lack of confidence in yourself. It's a lack of experience in the stock market. It's a lack of education. I don't mean to, again, put anyone down, but that's what it is. If you are scared to hold on to a play, right? It just means that you're not ready to probably be buying that many shares on that play. Go down lower. You know what scares a lot of people? Jumping off a 100-foot cliff. Jumping off a 100-foot cliff is very scary, right? Because not many people do it. But is it scary to jump off a sidewalk? No. That's like 6 inches high. Okay. Is it scary to jump off the low dive at your local pool? No, that's like 2 feet high. Okay. Is it, gets scarier as it goes up, right? It gets scarier as it goes up. Your shares are going to get scarier as it goes up because there's more money involved. So if you are a person that is basically just taking profits the moment that you make money, you are a person who's trading with too many shares. You are a person who is in on a play and not confident enough in your trading to be trading that many shares. So does this really even make sense? Does it, team? I mean, let's think about this. Let's just delete this picture right here for a second and let's just think about it. You are trading a stock, okay? Stick with me here. Whenever you are correct on a play. Whenever you are correct, you get out of it immediately. When you're right, you get out of a play. And when you're wrong, you hold it as long as possible. That doesn't seem like the correct strategy to me, does it? Okay, I'm wrong. Let me lose as much as I can. Okay, I'm right. Let me make as little as I can. So where's the correction towards this? If, for now on, you are literally willing to just say, all right, Deck, every time I jump into a play, I'm going to set a stop loss right here. Just do it. Just set a stop loss right there. You will never be able to ever lose more than whatever you set, $120. And this could be trade 1 and you lose $120. And maybe trade 2, you lose $120. And maybe trade 3, you lose $120. But the moment you actually get one right, you get one right and you get a nice little move. Well, guess what? You just made a total of $500 and you just made back this loss, you made back this loss, you made back this loss, and you're still up in the green. So if you are just willing to, again, move on from trades when you are in the red, you are going to have a winner. You're going to get a winner, especially if you study and you practice and you work hard. But we really have to get into, again, the habit of being willing to set a stop loss. But no one ever wants to, again, take a loss, right? No one ever is accepting of taking a loss. But I would much rather take a loss down $120 than take a loss down $3,000 because it takes longer to make that money back. It's harder to make that money back. So when we look at these trades right here, let's start talking about these stop losses. How big should I set my stop loss? Well, it depends on your risk tolerance. For me, it depends on, again, the price of the play. But for anything between, let's say that price of $4 up to $8, $9, kind of like the typical penny stock, $3 up towards that $8 mark, it's going to be anywhere in the range of like 15 cents to around 20, 25 cents. So if we have a $5 stock, if I buy in on a $5 stock, I usually don't want to see it going underneath 485 and maybe 480 at the lowest. That means that if I have 1,000 shares on this play, the most I am willing to lose is $200. Okay? That's the most I'm willing to lose. Now, how much should I be winning on these plays? You should always be winning double of whatever you're willing to lose. So if your stop loss is $200, you should always be then shooting for a $400 profit. Now, why is that? Well, that's because we always want to try our best to follow that 2-to-1 ratio, which is something I need to still work on as well, right? I'm not sitting here saying I'm a pro in any sort of way and I never do anything wrong. But the 2-to-1 ratio is how you will always be able to finish off green. Because if you follow that stop loss pattern and if you follow that 2-to-1 ratio, essentially you can start with $0. Let's say right here is $0. And if you lose $200, and you lose $200, and you lose $200, and now you get one win, right? Now you're only down $200 still. Now let's say you win one more time. Now you're up actually $100. Let's say again, you lose 200, you lose 200, and now let's say you get back up towards you get a winning streak. 1 win, 2 win, 3 win. Okay, let's say again you lose 3 times. Lose, lose, lose. Let's say again, you win 1. Let's say you lose 2. You lose. You lose. Let's say you win the next 3 trades. You win. You win. You win. Guess what happens here, guys? Look how crazy this just worked out. Because every single trade is minus 200, minus 200, minus 200, right? And then we have plus 400, plus 400. Now we have minus 200, minus 200. And then notice what we're having. every single win is double the loss, which is why when you actually break this on down, let's think about this here for a second. How many losses do we have? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have 10 losses. How many wins do we have? We have 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, does this make sense to anyone? How crazy is this to see? Let's again just get rid of these, 4 and 2s right here, just so it's easier to even just make out. So when we get rid of this, look how wild this is. Even though we have lost more than we won, our profit has gone from $0. And look at our P&L chart. Our P&L chart, we're technically up like $4,000 right now. And we're up $4,000 with a 45% win rate. We win 45% of the time and we're still up. And that's because we kept our stop loss close. We kept our stop loss tight. We were willing to get out of these plays. So that's just by following that 2-to-1 ratio. So for now on, I want you guys to start looking over on SBFM, right? Let's take a look over on SBFM right now. And you say to yourself, all right, Deck, I want to jump in on SBFM. And let's actually move it into a little bit of a different time frame. Let's go a little bit closer here. That 3-minute time frame. Perfect. All right. So we got this 3-minute time frame over on SBFM. We're looking to break down this play and we can take a look at it. All right. SBFM. Where's a great entry first off? Right? Stop losses won't get hit if you have a great entry. I actually had an email last night and someone said, Deck, every time I jump into a play, I don't like setting stop losses. And I say, why don't you like setting stop losses? And they say, because they're always hit. Let's discuss this for a moment. If your stop loss is always hit, what do you think the main problem is? The main problem isn't the stop loss. The main problem is you're not having the correct entry. For instance, if you go ahead and you just randomly buy SBFM right now, you buy SBFM, boom, I'm in on this play. I'm going to set a stop loss right here. Boom, my stop loss is right there. Is this stop loss going to get hit? Most likely, yes. Most likely your stop loss is going to get hit. Well, Deck, why? Like, I'm setting a stop loss. You told me that's the right thing to do. Well, the only way you're going to actually make money in the stock market is if you're willing to buy at the correct areas. And what do I mean by the correct areas? You got to have the right entries. You already know the best entry is here. The best entry is here or 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 here, or the best entry is here. If you're saying, Deck, I don't want to wait all the way down there. Okay, hey, maybe you could do a very nice entry on this support line, right? Going across the board right here, right? So if we, let's say, just grab this and you can say, Deck, I see a lot of support back at like these old spiking highs right here. Basically where old high here, old high here, old high here. Okay, these are all nice areas of support if you wanted to go ahead and jump in on this bounce play, right? So we basically have, you can buy this play anywhere on this purple line. You can look for an entry. That's going to be a great time to win. Or if you want to say, hey, Deck, I want something a little different. I don't want to wait that long. You could also do right here, right here, right here. And again, if it came back down towards right here. So step one to having a correct stop loss is have the correct entry. Because if you, again, just have a random stop loss right here, it's going to get hit most likely because you're buying in no man's land. You are buying in no man's land. This is where gambling happens. You buy SBFM right now, you're gambling. You're not near any predictability where the stock is going to most likely pop itself back on up. You're hoping that the stock just keeps on climbing. If you wait for your actual entry, you're going to be much better. So let's say, again, we nail these entries. Well, where would our stop loss be then? Well, if our entry, let's say on this line, this is right around 775, what would I put as my stop loss? 775, the stock's a little bit higher in price. If this stock started going back on down towards around, I would say 755. 755, I'd probably get out. If I buy 1,000 shares, that's going to, again, only allow me to lose $200. Now, if I'm in at the price of 775, what would be my target now be? The most I can lose is $200 if I buy 1,000 shares. Well, my target would have to be a 40-cent move on up, which means I would want the stock back up towards around 815. So if this stock starts coming back on down and I get filled right at 775, I want to see the stock up towards around 815 or so. Now, it doesn't have to be exact. If the stock's at 814 and you're like, oh, it looks like it's getting weaker, take your profits. Right? You're allowed to take your gains, but we just want to make sure that you are not turning into the trader, that all you're doing is holding your gains as long as humanly possible. And then you guys are, again, you guys are holding your losses as long as possible, and you guys are taking your gains within an instant. Stick to, again, double whatever your stop loss is. All right? That's what you always want to be understanding. Now, if you are nervous and saying to yourself, Dak, $200 is a big loss for me, and I've never made $450 in my life, well, then go down in shares. You won't be all right, let me tell you this right now. Would you guys be nervous if I made you guys trade with one share? You would say no, right? It's only one share. Dak, it's literally a penny. Even if I nail a $1 breakout, I'd make $1. You wouldn't be nervous at all. Okay, so go ahead and trade 10,000 shares. And you say, no, Dak, that's too much money. Okay, then find the middle ground. Find the middle ground where you're saying to yourself, all right, this is, again, getting a little tempting. This is hard. This is a little bit scary. And then go underneath that, right? We just basically want to build you up. Think about going into a weight room, right? Going into a weight room, first time you ever walk into a weight room, do you ever just, let's say, load up the bench with 3 plates on each side, start repping out 315 pounds, right? No one does that. No one goes in there the first time ever and starts repping out 315 pounds. Usually the first time you go into the weight room, maybe you want a bench, you start with literally the bench. Then maybe you put some 5s on. Then you put some 10s on. Then your muscles grow. You get sore. They get better over time. Then again, you grow. It's the same exact thing as your muscles, as in your mindset, your emotions. Your emotions get toughened up, right? You guys ever see those military movies where essentially maybe the first time someone ever kills someone in these military movies, they're all scared and shaken up and everything. But sometimes as the movie goes on and they've done it over and over and over again, they're just blank. They're just a blank. They're emotionless. And why they're emotionless? It's because they've done it so many times. Basically, you got to get to that. You got to be stone cold killer, baby. You got to get to, you are the blankness. You are, again, saying, hey, this doesn't bother me whatsoever. And when it doesn't bother you whatsoever, that's when you're not going to worry about, again, a stop loss. You're not going to worry about if you're going to make money on this trade. You're just getting in on this trade following the pattern. People get nervous because they're not confident in their trades. Usually it's because they don't have a great entry. So I don't know your account size. If this was me over on SBFM, I would still look for the same entry. Doesn't matter your account size, entries are the same. But what does change is share size. And share size is going to be your emotion. So with every single play, I always give it around 20 to 25 cents at most. And then again, I always try to double of whatever that is. You got to be willing to stick to it. Well, Deck, is it always 20, 25 cents? Well, if we're playing a stock like Tesla, team, would this make sense if I do 25 cents? Not at all, because Tesla is way too big. So let's say I buy in at 153 and 49. Okay, boom. The next order is at 153 and 50. I'm already out. You can't do 25 cents on Tesla. You got to adjust because the stock is so much bigger. But I'm talking about penny stocks, right, guys? Anything between, let's say, that $4, $3, up towards, again, $9 area. Okay? So stop losses are going to be crucial. Now, the next step to this is you're going to say, all right, Deck, cool. So we just place a hard stop loss and that is it. What's my favorite type of stop loss? My favorite stop loss is always going to be a trailing stop. You guys probably have this. You may have to ask, but if you guys go to a limit right here, you guys can do a trailing stop by dollar, or you guys can go to trailing stop by percentage. Okay? So what does a trailing stop do? Trailing stop is what I suggest every single trader starts using. Okay? And the reason why we want to be using a trailing stop is because too many people do this. They make this mistake. They buy in at $5. They have a hard stop at the price of $4.85. Hard stop if it comes down to $4.85. And then the stock does what? We buy in on it. It goes up. It goes up. It goes up. It goes up. You could be up right now $500. And then it starts coming on down. And you say, okay, give me a second. I'll lock in when it pops on up. And it comes back on down. Okay, give me a moment. It'll pop right back up and then I'll take my gains. And then it'll come back on down. Okay, well now I'm going to hold it. I was just up $500 and it comes back on down, $4.85, and now again you're out. Look what happened. You had $500 in your account, but instead you ended up holding it until you ended up losing $150. So what could you have done differently? Well, you could have taken your profits. Well, what if I told you there was a magic stop loss that got rid of your emotions and automatically took profits when you had them? That's what we call a trailing stop. So what you could do if you wanted to, is if you have E-Trade or any broker, you may have to email your brokerage, is you can go by trailing stop by percentage or trailing stop by money sign. Let's say, again, I wanted to do 10 cents. Essentially is, if this stock goes from $5 and starts spiking on up and goes up towards $5.10, instead of having a stop down here, this stop team is, your stop loss is going to follow the stock on up. It's going to follow the stock as it goes. So it starts moving and it gets a little pullback. As long as it doesn't fall 10 cents from its high, it's still good. Then it pops on up and then the stock keeps on going. And guess what this is doing? Your stop loss is just following it and following it and following it. And notice what eventually happens is the stock dumps. Stock dumps. Well, guess what? Since you had a trailing stop, whenever the stock fell by 10 cents, that's where it automatically locked out your gains. And let's say you make $550. So again, that would be 10 cents. You make $550. So that's why trailing stop losses are so fantastic, because how many times have you ever been up in profit and then you said to yourself, oh man, I was up and I gave it all back. Well, if you use a trailing stop loss, it's never going to do that. Let's say we have a trailing stop loss of, 20 cents right here. Same exact concept. Trailing stop loss, we set it from 20 cents, so it would be at the price of $4.80. If the stock starts again spiking its way on up, let's say we start moving up, starts coming back on down. The stock falls 15 cents. You're not out of this play yet. Stock starts moving itself on up, starts climbing. Then the stock again falls 10 cents. You're still not out of this play. Stock starts moving itself on up and then boom, gets a crack. The moment that this stock cracks underneath 20 cents, you are automatically locked out and you automatically can take your profits. So make sure if you guys do not have this, use a trailing stop by money. Change it if you want to by when you get in, I want to get out of this play by 20 cents. Or you can do, again, trailing stop by percentage, which would be like, okay, I want to get out whenever the stock falls 2%, something like that, right? So make sure you are using stop losses. You are not too cool to use a stop loss. Some people just don't want to use it. It's like, Deck, I don't want to use a stop loss. I'm good. Guys, no one is too cool to use a stop loss. Just like no one is too cool to not wear a seatbelt. Right? You guys wear it. Use it. It's going to help you save your life. It's going to help you save your account. So if you guys have any questions about stop losses, please let me know. Got over a lot of information there. If you have any questions, as always, let me know. But awesome job, awesome work, and another lesson wrapped up in the books, baby. Ah-hoo-hoo! That's what I like.